So much attention here at the Milken Institute Conference on inflation and the outlook for interest rates, but maybe we haven't talked enough about the global outlook and some of the biggest risks ahead. Let's bring in President at Lazard, Ray McGuire. Ray, good to see you again. It's been a while. Appreciate it.
Good to see you both. Great to be here.
In person. One of the biggest risks, I don't know if we talked enough about, is China, globalization risks. What are some of these conversations like with clients right now?
So I would separate the lens in two parts. One, and I'm going to come back to clients because the views for the clients are somewhat different. Not diverging, but different focus. What's in front of us and what's ahead of us. Today, clients are thinking about impact of inflation, the markets, valuation, both the asset management clients as well as the corporate clients. That's what's in front of. What is the Fed policy? What is it going to do with borrowing rates? How does that reflect in the valuation if I want to monetize, if I want to go fund a transaction? For the asset manager, for the corporates, what's my currency if I want to make a strategic transaction? Reliance on equity as a source, stock as a source. The benefit of which is that I get to share in the upside and I get to share in the synergies. So that's what's in front of us. What's ahead of us is, as you've described, what's taking place geo-economically and geopolitically. The global north and the global south. The dependence that the global north, especially America, has on the global south is not insignificant. For example, as we think about one of the macro trends, energy transition, if you look at the dependence that the U.S. has on the global south, China refines 70 to 90% of the precious minerals that are necessary for energy transition. If I look at the continent of Africa, the source of many of those raw materials, or Peru or Chile. So I look at the global south and see the dependence, unless we somehow figure out how to invest so that we become more self-reliant, we have exposure which is not insignificant. Today we're energy secure. Tomorrow we need to make certain that we're as energy secure tomorrow as we are today.
So from the perspective of your corporate clients, when you think about the over-reliance on other countries, does that drive investments as a way to safeguard the future? How do you think they think about that right now?
The answer is, well, not only from a corporate standpoint, but from a sovereign standpoint. The CHIPS Act, as an example, the recognition that we need to be able to manufacture our own chips, to perfect the manufacturing of chips. So yes, for the sovereigns, and for the corporates, absolutely. And what does that translate into? We now have 3 or 4 of the large tech companies going to put $200 billion investment into capital expenditures. So yes, corporates are thinking CapEx. How do I invest today? Data centers, as an example. Energy sources. Remember, in order to get to AI today, it takes up 4% of the country's energy. The predictions by 2030 takes up 25% of the country's energy. So we have to build energy sources in order to be able to power anything that happens in generative AI. So yes, our corporations are actively thinking about how they go through and make capital expenditures for the future.
Are corporations prepared correctly for either election outcome or the presidential outcome in November? I get the sense that CEOs they know it's there, but they're not really planning their business for either outcome yet.
Well, I think that it may not be visible, but corporations at moments in time like this go through scenario planning. We try to help them out. We have a geopolitical advisory group, which is populated by some of the best thinkers on the planet. And we put a lot of thinking in scenarios of what happens with this election outcome, what happens if there's a different election outcome. So the answer is yes, they're thinking actively about it. Our group is very active globally, and so the answer is yes.
What's the worst outcome? Care to share? What's the worst outcome?
There are a few scenarios out there to which we need to attend in order to be prepared.
Well, I guess my question would be, if we're talking about the US election, are the scenarios between a second Biden term or Trump term really that different from a corporate standpoint?
They could be, but remember,
because
across the world, across the planet, you got 50 some odd elections. So look at so the risks that we have as we think about investing in the supply chain, offshore, the two fundamental risks that investors look to. One is currency, and the other is political risk.
So let me ask you about that investment piece of it. You mentioned AI, you mentioned chip, supply chain. These are massive projects. We were talking about the CHIPS Act, $39 billion in subsidies. You look at what's happening in Europe, more than $40 billion at a time when rates are still incredibly high, or not incredibly high, relatively high, I should say. How do companies make that calculation about investing in the future, but knowing that that debt they have to incur as a result is still going to be pretty high?
So the question is, because these are so fundamental to how companies and the country operates, think of a scenario if we don't make the investments. So the answer is, from a return standpoint, we need to make sure that we're risk adjusted to have the appropriate returns, but we also have to think strategically. Remember, strategy drives financing in the corporate world. And even in the asset management world, strategy drives how they think about allocating. Today we have $10 trillion of capital on the sidelines deciding how it allocates itself in order to generate a return for the shareholders. We have to do the same thing in terms of how we allocate our resources. So companies are thinking very strategically about how they go about doing this. And so yes, the risk profile is critical. They need to make returns for their investors, for their shareholders, and we advise them that is a primary concern. But we also advise them on how they remain competitive. They're not incongruous, they're one and the same, in order to maintain the focus on making sure that they do what is necessary as a corporate citizen. So we're seeing all of it come into play at a moment in time when you have such geo-economic and geopolitical challenges.
We've spent decades doing big deals. One of the most celebrated folks on the street doing deals. What's companies' sense on the regulatory environment? Are they tepid on trying to do a big deal with a backdrop like this?
So you're great to ask the question. That's a headwind. And so corporations are trying to figure out as they go through and assess how they're going to grow and grow strategically, will there be impediments to a strategic combination? And that has become a factor here in ways that it has been historically, maybe not as profile as it is today.
Does it hurt, purchase price? Like purchase price, and maybe there's more breakup fees in any potential deal?
You'll see it get played out in different transactions. Yep. But the risk, apart from the economic consequences, the strategic consequences, and remember, the vast majority of these transactions are strategically driven. Very rarely in this environment are things just solely economic. Again, strategy is driving financing. So the answer is yes. As you think about a strategic transaction, you have to ask yourself the question and get as much advice as you can on what the likely regulatory response is going to be. That is now part of the calculus.
To pick up on Brian's point, though, when you talk regulation, it's not just about concerns about antitrust getting flagged. There's also concerns about any kind of foreign investment getting flagged, particularly in the tech space too. And I wonder, as somebody who has been in this space for a while, where do you see this all going to?
Where's it all going to?
Yeah.
It will play out for so long as we make the investments to remain competitive and get beyond the divisiveness, which we have to do in order for this country's best days to continue to be ahead of us. We got to make those strategic investments. We have to reduce our exposure to the supply chain. We have to reduce that risk profile.
You're talking about foreign supply chains.
Foreign supply chain. Today we're energy secure, admittedly based on traditional energy sources. Tomorrow we need to be energy secure and technologically secure. Remember, today we're the most advanced technology that exists anywhere on the planet. We have to maintain that lead, which means we got to continue to invest.
All right, we're going to leave it there. The president of Lazard, Ray McGuire, good to see you again. We appreciate it.
Great to see you all.
Thank you so much.